trying to make sense of some of the economic data we had over the last 1 week, a raft of them. Anyway, once you finish a quarter, then you get into a new month, then you got a bit of a heavy rainfall of economic data. So we've got a lot of this on the street, and we're trying to unpack them to get a sense of it, because we're getting into another round of it, beginning from this week. Bismarck Rewane, the CEO at Financial Derivatives Company. Thank you very much, sir. We appreciate your sticking around. So let's talk about the foreign trade. What are the upsides and the downsides of this report?
Well, the upside is that we have a positive development in our foreign trade report. In other words, our trade balance increased from 5.5 to about $6.5 billion. So there was about a 12% increase. That means our exports were more than our imports by $6.5 billion. But when you look at it, both our exports and our imports compared to the previous quarter declined. But the decline in the imports was more than the decline in the export. That's why your surplus increased. So the trade surplus feeds into the capital account, which is the invisible account. That is where your reserves. And in that quarter, we saw the reserves begin to deplete. In other words, our trade balance was positive. Our invisible account was negative because there were more outflows. In other words, foreign portfolio investors, hot money, monies from the stock market started going out gradually. And this was expected anyway, so it's not a big surprise. It happens anytime you are heading towards an election. It also happens when interest rates in the US begin to increase. But taking the trade balance on its own, it shows that our exports are more than our imports. But this was a quarter in which our oil production actually came down. So if you go into the third quarter, now we're expecting to be about 1.8 million barrels. LNG is going to increase. So our trade balance will be much better. Annualized, our trade balance was projected to be about $16 billion. Based on what we have so far, we are already at $16 billion. So give or take, we might be at about $21 billion trade surplus for 2018. However, the worrying point is that our external debt has increased. Therefore, you will find that our debt service burden in foreign currency and our foreign currency obligations begin to increase. So when we now get to a point after the elections, when we now want to go and restructure our debt, when we now want to borrow for some more infrastructure, then the question of our external debt obligations and repricing those ones, refinancing them at a time when US interest rates are increasing becomes quite a challenge. So we need to trade off, one, how much of international debt we want to add more to our books, and two, by how much we are trying to bring down the debt service burden of Nigeria for fiscal consolidation. So all said, this second quarter was a tough quarter for Nigeria. The third quarter is going to be slightly better, but as we go towards the election, the economic picture is not going to be exactly rosy. For those of you going to Bali for the World Bank meetings in Indonesia, the questions are going to be raised. You see, one of the reports today showed that Nigeria is number 6 among the African countries, which is not where we should be, based on certain challenges that we are facing. So we have our work to do. We need to now begin to pursue growth. And if growth is down to 1.5%, better stay at that level and doesn't go lower, because that could be a problem for Nigeria.
Mr. Rewane, those who are in charge of pursuing this economic growth are those who are busy picking up nomination forms as we speak and are busy crisscrossing the country. So how much of the political downside do you think is still there for us for the remainder 120 days of 2018?
Well, as far as we're concerned, democracy is not a perfect form of government, but it's one of the best forms of government at this point in time. So the price we pay for democracy is that the electoral cycle, the political cycle will always conflict with the economic cycle. So one cannot blame them for looking for power, but if those in power can leave those to make policies, to carry out the policies right independently, then the world will be an ideal place. Even in the US and Europe, we're having that problem. So I think that for now, the cost of politics on Nigeria, the cost of political tribalism now being worsened by what we call economic tribalism, is becoming a major problem for the country. Look, I don't know what it is, but the impact of the MTN fine and the lack of clarity, as we don't know what the allegations are and whether they are justifiable, has made many international investors say, look, let me have my money. Because if this can happen to the largest investor in the telecom sector in your country, then what the hell am I doing there? So there are questions that are being raised. So the politics ideally should be separated from the policy, but we are beginning to see both of them commingling at this time, and it's creating problems for the markets and the economy.
If we look at the trade report, what you call the foreign trade report, trade and services segment seem to look contracted in the period. Do you see a worry that even though non-oil, that we have this non-oil growth, but again, we're not yet where we ought to be? Do you think there's still a major problem there for us to fix?
No, that's not a problem. Non-oil sector in activity is higher, but in revenue, it's nothing. The total non-oil exports put together of cocoa is about $500, $600 million. Sesame seeds is maybe about the same. So you're not getting more than $1 billion or $2 billion, while oil is giving you, oil is giving you about almost $60 billion. So whether you like it or not, activity will be diversified, but revenue is still concentrated. So I don't worry about that. But in the quarter in question, our oil production was down to 1.6 million barrels because we had some shut-ins, we had some force majeures, we had some problems with the pipelines. But now that those problems have been fixed, we are going to be back. October liftings are going to be 1.8 million barrels. The price is about 77, 78. So our oil revenues are going to be back up again. The question is, what are you going to do with those revenues? And how are you going to deploy them? Are you going to use them for consumption? Are you going to use them for investment? Are you just going to use them for debt servicing? So you still have to deal with fiscal consolidation. You still have to deal with removing subsidies, not on petroleum, but subsidies on the exchange rate and all the other things. But you cannot do any of these things before the election. So right now, we just have to be, in wait and see mode. And, I think that the economy gets better immediately after the election, as long as there's some stability during the elections.
But again, all these conversations, Mr. Rewane, revolves around the FX market. How much longer do you think buffers will be able to hold on to all this pressure coming in?
Well, I think that, to be honest with you, if I discount all the foreign portfolio investments, if I discount everything that is there, I think that we still are in a comfort zone. In other words, even if our reserves go down to $18 or $20 billion, it's still better than what it was. So I'm not concerned about that, but let us not stop using the reserves as a figure of success, because we are going to have to use those reserves to defend the currency at this point. It won't be prudent, or it won't be wise to allow the currency just go, at least in a run-up to an election. You've got to defend it. You've got to use some administrative means as well to protect it, and then without losing sight of the economic fundamentals. But this is a realistic position. What should happen the day after the elections, after everything is done, then you begin the whole adjustment process. But right now, if you look at the purchasing power parity value of the Naira versus the market value, almost you can say in some certain respect that the Naira is undervalued. So, but nobody should be tempted to try and appreciate the currency at this time, because it's just going to be counterproductive. What we should do is to keep our eyes wide open and continue to support the currency. However, with the MTN saga, the pressure of foreign portfolio investors going out is going to increase, and that could actually accelerate the process and the pressure on the currency, which we expected will happen in November. I think it's going to start happening September and October rather than November, December.
Well said. So let's take a look at the outlook from the central bank. This survey, business expectation survey for August, looks very good. So as respondents expressed more optimism in the macroeconomy, they expect the Naira to firm, to appreciate in the current and next month, identified some downside outlook on the total volume of business activity looking very positive. Are you positive on this business expectation survey?
Well, you see, we are in election season. You must differentiate between analysis and propaganda. The reality is that at this point in time, we expect stability. Anybody who thinks that things will get better is not telling you the truth. The truth is that there's a challenge out there. People said things were going to get better in South Africa, and look at where they are now. The reality is that as interest rates are going to increase in the US on the 24th and 25th, we are more likely to hold our own. If we do that, the interest rate differential will be negative to us. The dollar is strengthening. The price of oil could begin to come down. So let's not be carried away by a lot of hype. The truth is that the economy is still treacherously on the path of a slow, painful, and fragile recovery. The monetary policy, the monetary stability is there and it's being handled quite, professionally. I think that we shouldn't get excited. We should just allow things to go coast along until after the elections, and then we deal with our reality. We cannot do anything fundamental in the run-up to election. It won't be wise and it won't be prudent.
Well, that sounds like a nice way to end it, Mr. Rewane. Try not to scare everybody, but at least try to keep one eye permanently open. Maybe we should just lounge around a little bit till the year ends. But not in particular. Schools are just coming in. Folks are going to be paying rent into the new year. The real estate market is there. Landlords, whatever happens to you, the landlords want their money or their rent. So whichever way here.
Bosin, you see, no matter the outcome of the election, no matter what it is, the economy, there's work to be done, and the economy will get better after some adjustments after the election. So the Nigerian economic story remains intact. It's only means what we are saying is that there's work to be done, and you can't pray your way out of this. You can't fast your way out of this. You can only walk your way out of this.
Let's keep working, Mr. Rewane. Thank you very much. We appreciate your time. Bismarck Rewane, the CEO at Financial Derivatives Company and Channels Television Economic Consultant. Let's get back to what's making the headlines today. Of course, that's already generating a lot of buzz on social media and on Twitter as we speak. It's all out what the billionaires chasing by the FIRS is concerned. Companies with billions of naira in their accounts. The tax agency says now firing on all cylinders, going after all the billionaire tax defaulters and looking to raise Nigeria's tax to GDP ratio by 20% to 20% by the end of 2018. So Fowler, the FIRS chief, says is targeting 6,770 identified companies, billions, about 1 to 5 billion naira in their accounts, who are yet to obtain their tax identification number. It says the FIRS will now use the banks to do substitution on those accounts and for those companies, and that's it. If you haven't filed your tax identification, or you have a tax identification number and you're yet to pay to declare your tax, then the FIRS is coming after you. Substitution is a process where the banks are empowered. Fowler says that is legal, empowering the banks to become tax collectors or become agents for the FIRS to collect those tax rights from your bank account. Fowler says the accounts will be frozen or put under substitution until the account owners step forward for tax payments. Of course, we have a lot of reactions currently on Twitter asking what exactly will this mean. We want more clarity from the FIRS regarding whether this will be on turnover or on profit, and all of that will be a process that will have more clarity from the FIRS expectedly moving forward. Meantime, 2 years ago, the central bank directed all banks to freeze accounts considered dubious and used for illegal FX transactions, and the federal government also then initiated moves to freeze bank accounts with no biometric certification and other details. That was later suspended. Now, the FIRS says all tax administrators across the 36 states and the FCT should work hard to raise Nigeria's tax to GDP ratio to 20% by the end of 2018. Fowler says the country rely on the tax administrators to provide it with adequate funds with which to fund the country's development objectives. And of course, it's already in the news that the Bank of Industry has gotten $500 million from the China Export-Import Bank to fund the Nigerian government's objectives of providing modular refineries in the country's oil-rich Niger Delta. That's the story there for you. If you're in doing the business of modular refineries, I'm sure you already have your ears to the ground That's $500 million on ground to procure equipment and other things you need to set up modular refineries. We're back into